Jai Hind friends. If you are new to this channel, then please hit the subscribe button so that whenever a new video is uploaded, you can get the notification. And if you like the video, then please hit the like button. This will keep motivating me to make these videos. So let's start with the market. So market this week again was in red. It was down about 2.35% and it closed at around 23,500. So overall again a negative week for Nifty. And the reason we are aware, there is an FII selling which is happening and the results of the company are also not that great. That's why there is pressure in the market right now. If you look at the Nifty chart, the support was around 2400. It has broken that support and it has gone further down. How much further it will go down, nobody is aware. It can bounce back from this level also, or it can go further down to 2300 and can bounce back from there. So nobody has an idea how much Nifty will fall. So if you are a long-term investor, I think this is a good opportunity. We should take this fall as a good opportunity and find companies which are fundamentally strong and start building positions in those companies. If you are a person who's sitting with cash, this I believe is the right time to keep deploying your cash in regular installment. Maybe you can bifurcate it into 4 or 5 installment and then start deploying it, because you never know that from which level the Nifty will start bouncing back. If you're somebody who do not have cash right now, then you don't do anything, don't do panic selling. Just stay invested with your good companies and just be patient. Now let's talk about two companies where a lot of investors are stuck and maybe getting confused on what they should be doing. Should they be sticking to these companies? They should buy more, or what is it that they should be doing? So Asian Paint, as you all are aware, is into paint sector. It is a leader in the paint sector. Its market cap is around 2,38,000 crores. And if you look at the ROCE, ROE, both are above 30%, which is great. There is no doubt about it. Fundamentally, it's a very, very good company. The business model is also very good. The only reason that it is struggling right now is because there is no growth. If you look at the sales number from last 3 quarters, it has been in negative, and that is the reason that share market is punishing Asian Paint and its share price is going down. Here you can see the Asian Paint is down from its 52-week high by around 27.46%. So now let's talk about what I feel we should be doing in this company. As we all know, there is nothing wrong in the fundamental. So if you have invested in Asian Paint, I would suggest stay invested in it, because investing, as we talk about, is a long-term game. That's why we always say invest for long-term. All these things will come and go, but companies with good fundamental, good business model will eventually recover in the longer run. And during this difficult phase in terms of result, it is very, very important that you follow the management commentary, follow what they are saying about the future, what they see in the future. So I listen to the commentary of the management, and as per them, in the next quarters, there should be an impact on the price increase that the management did. So the numbers might improve slightly. However, for the entire year, the management said that the growth volume will still be in single digits. So it's completely your call how much conviction you still have with this company. If you have good conviction, stay with it. But at this point, I would not say that you invest more into this company, because already you have invested, and you can search for other companies which are doing great in terms of business, which are showing growth, because ultimately market rewards growth. The company which shows less growth, the share price increase will also be less. The company which are showing good growth, the share market will accordingly reward them as well. So it's not a bad company to have in this portfolio, and that is the reason that we do diversification, because you never know, something of this sort can happen with any company, any good company also. That's why you have to diversify your portfolio. Sometimes few companies, like if you have a portfolio of 10 companies, sometimes maybe 6 will do good, 4 will not do good. Sometimes it'll be reversed, then those 4 will start doing good, the other 6 will not do good. So that is how the risk is mitigated. So in nutshell, if you are invested in this company, do not book losses. Stay with this company. I'm sure your price will recover and you'll make decent return in the longer run. But if you're sitting with cash, then I would say that look for companies which are showing growth. Now let's talk about Avenue Supermarts, which is DMART. This company also has a similar market cap of around 2,50,000, and this is also from the consumer goods sector, catering to the consumers. Again, the same problem. The consumer slowed down. The growth has slowed down compared to what it used to be when it got listed. And then accordingly, you can see the impact in the share price. When it got listed for the next 5-6 years, it performed very well. Now, since the growth is reducing, the share market is accordingly punishing this company as well. So again, I think we can follow the same approach what we are following in Asian Paint. Do not add more. If you are invested in it, do not book losses and get out of it. Stay invested in it. In a long term, you will make decent return once the consumer demand is back, which I believe, I may be wrong or right. And consumer demand, I believe, should be back by next year in the second half, because if RBI is going to cut rates in February, then the impact we might be able to see after 4-5 months. And that is the time I'm expecting that things will be better. So next year around second half is what I'm thinking. Things will get better, but we never know. We can never say anything with certainty in stock market, but we can always have a view, and this is my view. Now I'll talk about two companies which are showing good result and are also from a sector which is known as healthcare, which is doing pretty well in this scenario. First company is Yatharth Hospital. So this company has a chain of hospital in North India, and it was formed in 2008, and you can see it has multi-care hospitals in Noida, Greater Noida, Noida Extension, Uttar Pradesh. The market cap of this company is still very small, around 5,000 crores, and stock PE is also not very high. It is a reasonable PE, and ROC and ROE are also good, around about 20%. Now, if you look at the chart, it got recently listed in stock market around September 2023 is when it got listed, and from there it is starting going up. So now, right now, it is in an uptrend, and the reason is because it is showing good results. Here you can see the performance of this company. The growth has been very good, above 20%. Last quarter it was around 27%. Before that it was 37, then 23, and before that also it was around 20%. So growth is good. The operating profit margin is also very decent, 25%. So that is the reason you are seeing the share price is continuously going in an uptrend. Now, if you look at the sales growth of this company, it's very decent. You can see 12 trailing month 28%, last 3 years 43, 5 year 47. Profit compounding growth is also very good. 5 year 96%, 3 year 85, and last 12 trailing month 52%. And stock price CAGR in last 1 year has gone up by 57%. So it's a new company and a very small company right now with the potential to grow even bigger if they keep expanding their business. And return on equity also you can see it's very healthy. If we come to promoter holding is also decent, around 66.54%. FII also hold good stake in this company, 6.28. DI is also around 7%, and remaining is with public. Number of shareholders are also not very, very high. It is just 62,000. So it's a good company according to me, which is showing consistent growth and also not a very big company right now, but potential to become big in the future if it continues to give this kind of result going forward also. Now, if you look at the overall average PE of the healthcare or the hospital sector, you can see the median is coming around 56, and this hospital is around at 40 PE, which we can say that it is still not overvalued. It is at a decent PE and it is showing good growth as well. So if you are interested, you can keep this company on your radar and do your own research and then take decision accordingly. Second company is Vijay Diagnostic Center. It provides diagnostic services across 13 cities. And in South India, this is the largest integrated diagnostic chain. So this is also a good company growing at a very good rate. And if you look at the chart is also going in an uptrend right now because this company is also showing good growth. If you look at the quarterly numbers, the quarterly growth is very good, around 31%. In September, June 29%, March 28%. So it is growing at a good rate, and the OPM also is very healthy, around 40% on an average. And if you look at the sales growth is also decent. In the 12 trailing month, it is increasing 27%. 3 years 13, 5 year 13. Profit compounding for last 5 years is decent 19%. 3 year has been low, but in the 12 trailing month, it is growing at a good rate 30%. Stock price CAGR also last year it has grown by 74, and in the last 3 years CAGR has been 21%. Return on equity is also decent, around 18 to 20%. If you look at the promoter holding is also good, around 53, 54%. FI also hold good stake in this company, around 18%. DIs hold around 23%, and very less is with public, which is always a good thing. And total number of shareholders are 62,000. So this also is a decent company. At this moment, these are the companies which are showing good growth and good consistent returns. So if you are interested in this company, you can do your further research on this company and then take action accordingly. Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, you can mention it in the comment section also. So bye for now. We'll meet in the next video. Thank you.